Hey everybody, we're going to do our final video now on everything that we've been going over, and that video is associated with what's known as net profit. So net profit in the business world is the actual profit after working expenses that weren't included in the calculation of gross profit have been assessed. And so this term applies to the final profit amount after all the taxes have been paid out, after all of the shareholders have been paid out as well. Any cash considerations, including interest expense, depreciation, and other miscellaneous costs, have also been included at this point in time, which is the final profit that's associated with a company. For our people, net profit refers to what is left after all the bills have been paid. That's the easy way to say that. Now, Dalton Carpet One itself is actually an organization that's part of a larger organization. That larger organization is called Blanton Allred Incorporated, and that's the company that Curtis and I own, and it holds these assets, which are Dalton Carpet, DCO Commercial Floors, DCO Dell, all of the different assets, even the real estate asset. And so net profitability for us is actually at that Blanton Allred level. So from the business point of view, when we think about net profit, I'm thinking about it above the Dalton Carpet One level. And that's okay, because for the sake of this discussion, it's going to make it easier for us to see where I'm going with net profit as it applies to Dalton Carpet One. So when we defined operating profit, we discussed that that's the profit that's made as a byproduct of operations. For us, we're going to be using that term somewhat synonymously with the term of net profit, with a couple of different exceptions. And what I want to do is I want to kind of explain a little bit of the difference here. So why is it important for me to do that? Well, it's simple. When we take all of the costs, including operating profit, and make them costs of a job, then presumably there would be nothing left. So if you remember in our breakdown, there was revenues, cost of goods, gross profit, overhead, operating profit. Well, if you were to take all of those costs and put all of those costs in as a percentage to an actual job, then what would typically happen is by the time you got done subtracting all that from revenue, the job profit percentage would be at zero. Right? And that would be a job that included every single cost, including the operating profit for the company. And so in our system that we're moving to, that's how we're going to balance the costs against the revenues. And so with a profit that's already included in the cost, meaning the operating profit, with commissions that are included in the cost, we're going to come down, and the last line is going to be net profit. Now, on some jobs that might be zero, and on some jobs it might not be. But let me go a little bit further in this so that I can explain this a little bit further to you. So here's an example of how that would work. A customer does business with us, and it's the byproduct of us giving them an estimate for work that's going to be performed. Now that estimate is exactly that. It's the best guess that we can make going into this job, right? And so when you're making your best guess, you're assuming as normal that these are the costs that's going to be associated with getting that job done, whether it's the cost of the product like we talked about, the cost of the installation. Well, at Dalton Carpet, what we're able to do now is we're able to say our estimate, our best guess, will include all of the costs that are associated with doing that job, and they will be assessed based on the customer type that it is. So what happens now is that we sell and we create revenue, and then we have our cost of goods, and then what's left is our gross profit. Now, from the gross profit number on, that's where we're assuming or hoping that we have enough money left to pay all the bills and to put some in the pocket of the shareholders, okay? And the truth is that that's kind of a guess. It's like a hope, all right? So we don't want hope to be a plan. Hope's not a plan. Hope's never a plan, right? What we need to be a plan are firm numbers that make real sense, that tell us exactly how much money we're going to make and how much money we can potentially make in terms of what our pricing strategies will be going to the market. So just so that you understand, the net profitability of a job now will be what is left over after we have all of the other costs associated with a job placed against that job, or assessed, if you will. This is how it kind of gets a little fun for not only what we would have called the sales representative, but for also the staff member. So let me work you through this and kind of show you how the estimates are going to include the costs, right? So the first thing that we're going to have is our revenues. back to the revenues, the amount of money that the customer is going to spend for us for the project. Then we start assessing costs, right? The first cost that we assess is the cost of goods sold. And that, of course, from our earlier video, discussed material, installation labor, credit card charges, miscellaneous fees, all of these other types of costs. The third cost that we're going to assess is the overhead cost. Now, today, there is an overhead cost associated with every order that we write. And basically what's going to happen is we're going to remove that and we're going to go to a very customer type focused overhead. And what that means is that the overhead for one type of customer may be higher than for another type. For example, a retail customer has a higher overhead because there are more samples, there's more showroom rental space, there's more in terms of marketing that goes into it than, say, a builder customer, like a track builder customer who doesn't use all the samples, they don't use the showroom. So when you think about the cost of operating, if this business were strictly a track builder business, we wouldn't have these showrooms, we wouldn't have these beautiful showrooms, we wouldn't have all these other things, we would just literally have our offices and installation crews, and that changes overhead, okay? Which changes what the profitability of each job has to be in order for us to make money. Now, in addition to a fixed overhead percentage being assessed based on customer type, there will also be a minimum profit assessed based on customer type. Again, if we're talking about a retail customer, and I'm just going to use Track Builder because it's easy, and a Track Builder customer, we're talking about saying that based on what our pricing strategies are in the market, we assume that our profitability or our operating profit for that customer will be this percentage or that percentage. That will be assessed into the estimate. So this is before we've even agreed to do business. And then last but not least is the commission amount on the job. So in the past, what has happened is that our commissions have been generated from a place of the gross profit. So by the time we get done subtracting out the cost of the materials and the cost of the labor on the job, then what's left, again, was gross profit, and we paid commissions as a percentage of that. And so what we're going to do now is we're going to assess to the job, whenever the estimate is created, a minimum commission. And what that means to a lot of people that are on commission is there's not going to be a job where you don't get paid. This is good news. This is fun. That's good news, right? So I think that that's important. Here's what's more important though. Depending on the pricing strategy and the product mix that's used to go get the customers that we have, what's going to happen is our net profit will be what's left over after all of those costs are assessed. And this is where it gets real fun, right? So how do I earn more money than the minimums that are associated with the job? And I want to share that with you because by pre-building those costs into a job and presupposing overhead and presupposing an operating profit and presupposing a minimum commission, what we've created is a job that has full cost accountability with it, which means that if the price of that job was more than the total of costs, there'd be money left over. That money is net profit. Now, if you were the designer or the account manager, how does that benefit you? Well, it's easy because it becomes a bonus, which means that you have your minimum commission percentage built into the job. So you know you're going to get paid that. But if your pricing strategy puts you over the total cost of the job, then what I'm going to do is I'm going to flip the current commission schedule, which was 75% to the company and 25% to the salesperson. And now that a minimum profit, operating profit, has been assessed to that job, I'm going to flip it. And now the leftover money I'm going to split with you 75% to the sales representative, 25% to the customer. This is awesome. On a $100 job, where with the minimum operating profit, the minimum commission, and all the other costs associated with it, that job would be zero. There'd be zero extra money left over. If you were to be able to charge $105, then your minimum commission would be paid plus 75% of that $5, right? And if I'm not mistaken, 75% of $5 is like $4 or $4.25 or something like that. I don't know. I'm not good with math. So that's good news. But how does that benefit staff members, right? How does that put more money in the pocket of a staff member? This is the exciting part for them, okay? Again, the estimate is the best guess at what we're going to do. And that best guess, with a full complement of costs associated with us, gives the customer service team a budget to work with. Now, when we run baselines at the beginning of jobs, we do that with the intent of being able to see where we started and where we finished, right? Because measuring how you start versus how you finish is all about how you perform in the race, is it not? This is the good news. The good news is that when that estimated budget is sent down with all of those costs, the customer service team that works with that customer gets the opportunity to either meet or beat that cost, right? Meet it or beat it. If you meet it, you did your job, congratulations, good job. If you beat it, you did more than your job. And when you do more than your job, you should be rewarded for doing more than your job. So let me give you another example. Let's go back to the $100 job, right? And the $100 job would have had $100 worth of cost on it, which would have made our net profit zero. Okay? Now, this is where it gets fun. Let's say that instead of spending $100 to get that job done, that you spent $90, right? And $10 went down because of operational performance. That $10 goes into the bucket that gets split by that customer service team once a quarter. That is how you make more money working here, by being customer focused and customer centric. So very important, right? What happens is that when you work as a group or as a collaborative effort or a collective effort, not unlike bees, right? When you work like a collective effort, what happens is you get the opportunity to find areas to increase efficiency on a small level. And those small efficiencies add up into larger efficiencies that essentially equal larger dollars that wind up going into people's pockets. This is the challenge that I'm putting out in front of our customers, in front of our staffs, right? I want them to understand that they, as a staff member, have the same investment in them as the customer does or as the salesperson does, which means that you get rewarded for your ability to do better work than you had done before. And it's a team effort, it's a collective effort. Not one bee makes honey. It takes a bunch of different bees doing a bunch of different jobs in order for that honey to be produced, right? It's awesome. That's what we're working towards. So, providing a successful outcome for the customer, right, against a budget that's presented, and finding efficiencies within that budget puts money in your pocket, and I'm happy to do that and share that with you, because I believe, in closing, that the most important thing that I can get to be clear to all of you is that this company needs to exist in a way that's fair to everybody. Fair to the sales executive, fair to the staff member, and fair to the shareholders, right? And if we can be fair to each one of those parties, then what can happen is we can then make the profits and live the lives that we want to live. And when we start talking about fairness, different things start coming into the fold. And some of those fair things that come into the fold are better balance in your life. You don't have to work 3 times as hard because you're working as a collaborative effort. And I know you think you're collaborating now, but I'm telling you, when we start this collective collaboration, you're going to find that you're going to work more efficiently and a little bit less, and you're going to be a happier employee. And happier employees are better employees. When you have the work-life balance that you deserve and that you work so hard to earn, then and only then are you able to do the things that you want to do. You see, to me, work is a vehicle that allows life to take place and not the other way around. Life is not a vehicle that allows work to take place. And that's the reason why I'm engaging in these changes for the company. You know, these ideas aren't radical, they're not unfair. And to be perfectly honest with you, I think that what they actually do is they put the customer at the center of every single effort. And because of that, and when we do that, I think what that will do is that will help us to live our purpose, which is making it easy for the customer, and to live our values of focusing on them, of doing whatever it takes within our own jobs to get the work done for them, and finally to always get better, to make sure that the next customer that comes to us gets even better treatment than the last one. So I want you to know that these changes are for the betterment of our customers, but they're also for the betterment of you, your lives, and your incomes. So I hope that you join me with this. I'm really excited about it. I've never been more excited about doing something like this before in my life, and I think it's a good opportunity for this company, where it's at right now, to make a significant shift to be prepared for the next stage of growth. And that's really where we're at. So we've kind of plateaued, and we're getting ready for the next stage of growth. And in order to do that, we've kind of got to retool a little bit and rebuild. And that's what this is all about. So I thank you for your attention, and I look forward to any questions or anything that you might have. But in the meantime, please enjoy these videos, and I hope that you learned something. Take care. Bye.